Welcome back. Today we will learn what it means to go long and to go short, and how to actually place an order. But first, let's start with a quick review. A futures contract is just that, a contract to take delivery of a product sometime in the future at a price agreed upon in the present. Futures do not trade in shares like stocks, they trade in contracts. A speculator who uses his crystal ball or whatever means at his disposal, who believes a futures price will increase, would buy as many contracts as he or she can afford today, with the expectation of later being able to sell them at a higher price. This is known as going long. But what happens if you, as a speculator, believe that the price of a futures contract will decline? Then you can sell futures contracts in the hope of later buying back the contracts at a lower price. This is known as going short. You sell now in anticipation of a lower price in the future. Now, this is an interesting aspect of trading that is kind of difficult to understand. How do you sell something you don't have? Well, I'll give you an example. Suppose you want to come and live in Germany in 1 year's time. Since I live in Germany, and I'm very familiar with the prices here, I may tell you, if you pay me $200,000, I will get you a 300 square meter house with 3 bedrooms, 2 bathrooms, a living room, and a garage. I offer this because I have seen the prices of the houses decline over the last 8 months, and believing that trend will continue, I think I might be able to turn a profit with this deal. Now you probably go on the internet and check for the current prices per square meter and realize that in fact it is a fair price I am offering you. So you agree with me and pay me $200,000 for a house next year. Remember, you are moving next year, and I am pretty convinced that if I wait a few more months, I will probably be able to find a house with those specifications for the lower price of, say, only $170,000. Then I will have the house ready for you when you come to take delivery. Now, 6 months down the road, I see the prices have come down even further, so I buy the house with those specifications and pay $165,000. I made myself a profit of $35,000 because I am a very informed speculator. Now, what would have happened if 6 months down the road, the prices instead would have gone up? I may have ended up paying $220,000 because I have to give you a house with those specifications as in our agreement. So I sold in advance and I lost. This is a clear example of how you can sell something you don't have. So in trading, you can sell for profits. For example, you are an oil trader and you know everything that is going on in the world that affects oil. Suddenly, you come across some very reliable sources that show you there is going to be a lower demand of oil while there will still be an increase in the production of oil. So you conclude that oil prices will fall. Then you rush to your computer and sell several oil contracts at the current price. You know that in a couple of days you will be able to buy them back at a much lower price and make a handsome profit. Sure enough, you were right. The price of oil drops an entire dollar, so you end up making $1,000 for every contract you sold. Now, the opposite may be true as well. You may see that in a couple days, the price actually went up and you are forced to exit your position, paying much higher prices and losing money. Now, let's see how and where you would place such an order in your computer. You need to bring up a DOM. A what? A DOM. That stands for Depth of Market. Now I'm going to show you just what that is and how to do that in your Ninja Trader. Okay, so here we have a chart, and now we need to have the DOM, which is where we can place our orders. So you go to your control center, click on File, go to New, and then you look for something called a DOM. There may be a dynamic superdome, or in my case, a static superdome. You can choose whichever one you have. I use the static superdome, and it brings up this little box here. Now, one important thing is you need to make sure that you're in the correct contract. So we're trading March 2014 right now on the 6E. So I have to make sure that I also have that on my DOM. Now, if you'll notice, on the dome, you have some columns here. You have the price, then you have your buy column, and your sell column. Now, before I show you how to put an order with that, I'm going to help you set up your dome in a way that what you have to do in each column is a bit clearer for you. Okay, so what you do is you right-click and you go to Properties. And then you look for the buy column color. There it is. And I'm going to change it to green because we're buying, so that will alert you when you want to buy a contract. You're going to go in the green column. And now I'm going to look for the sell column color. And I'm going to want to set that to red. So again, whenever you want to sell a contract, you know to go into the red column. And I apply that. And there we go. Now I'm going to show you how to actually put an order in. So I'm looking at this chart, and let's just say with whatever abilities and tools I have, I decide that I think this market is going to go up. So I go ahead and put an order in on the buy column at whatever price I want to enter at, whatever price I want to buy at. So I put that in. Then I wait for that order to be filled.
Order filled.
And then I can put my target. And then I place my target in the sell column.
Order pending.
Because now I want to sell at that particular price.
Order filled.
And there it was. It was a very quick trade, and I got just one tick. Okay, another thing I want to tell you is, as I told you about in the last video, I left those markers there so you can see exactly where you bought and the price and where you sold and so forth. It's only that if you're taking a lot of trades, your chart tends to get very cluttered with those, so that's why I remove them. Okay, now this time, as I'm watching the market, I'm thinking, well, using whatever tools and knowledge I have, that the market is actually going to go down. So I want to take a trade now to the downside, which means I'm going to have to sell first and then buy back later. So I will wait for the market to get to an appropriate level where I want to sell. So I decide what price I want to sell at, and I put my order in at the sell column.
Order pending.
Now, before you can put your target in the buy column, you have to wait for that order to be filled.
Order filled.
There. Now that it's filled,
Order
now I
pending.
can put the order in the buy column.
Order filled.
And my order was filled, and I got another tick. So that's how it goes. That's how easy it can be. Next time on TNT, I will explain to you how does one make money in the market and what are the types of buy and sell orders we can use. Until then, bye-bye.